We also like Japanese equity because we expect the yen to depreciate over time, and this should have a positive effect on earnings growth.
Hello Nigel, and thank you for joining us to discuss your 2017 investment strategy and asset allocation. To start off with, why have you maintained your exposure to emerging market equities?
We like emerging market equities, especially for the valuations which we deem still attractive, both in absolute terms and also relative to developed markets. We've seen from 2016 an inflection point in terms of momentum for earnings growth, where productivity growth now is higher than wage growth, which in the past was an issue for the equities of emerging markets because that's applied pressure on profit margins. And also the macroeconomic background is improving for the global emerging markets. And for the first time in 6 years, we expect positive growth at the global level. So this should provide a decent background for emerging market equities to do well.
And moving on, what are the reasons for holding European senior loans within the fixed income space?
We have been invested into European senior secured loans for quite a while now, and we still feel comfortable holding these exposures. The main reason being in the current environment where we are observing rising yields, duration risk within loans is very, very low because it is based on a floating rate coupons. That is the main reason. We also feel comfortable with the state of the balance sheets of European companies. The level of leverage in terms of debt remains quite reasonable, and especially if we compare it to what is going on in the United States. And also looking forward, expectations for default rates remain very low. So that should mean limited pressure on balance sheets and a good environment for this asset class. Also, there's a sort of a knock-on effect because of the European Central Bank's corporate sector purchase program, which has sort of pushed people to go into lower quality asset classes to go and pick up yield. And in this respect, loans should also benefit from this purchase program.
And finally, could you tell us why you believe that Japanese equities are attractive?
Yeah, we like Japanese equities also from the starting point of valuations, where we see decent discounts to equity markets like the United States in particular, but also compared to Europe. We also like Japanese equity because we expect the yen to depreciate over time, and this should have a positive effect on earnings growth. Other reasons is we see a big effort by Japanese companies in terms of corporate governance, which is, amongst other things, driving them to try and improve their returns on equity. And so this should be all factors that should support the equity asset class. Other reasons is also an improvement in terms of economic growth, where Japan has been struggling over years, but we are expecting things to improve also in 2017.
Nigel, thank you very much for joining us.
Thank you for having me.
And thank you for watching. And if you like this video and would like to see more, be sure to stay with us here at Dugoscopy TV.